Good morning, Daria.
Good morning. How are you?
Great. How much of this is Donald Trump and his cult of personality driving the markets?
Well, I'm not going to get involved in the political debate, but I can tell you this much. Since Donald Trump was elected, the stock market's been up an average of 35%. That's got to say something.
Absolutely, but why? I mean, is it because he is saying that he is going to make America great again, or is it earnings? I mean, what my question is this: is it all emotion, or is it based in hard numbers?
Well, it is. I mean, the stock market is always based on emotion. It's also based on fact. You got to look at several things. The economy is moving in the right direction, whether that's a result of President Trump's policies or whether it's a continuation of the previous administration's policies. The economy is moving in the right direction. One analyst said it really well yesterday after the big close. He said it's kind of like a baseball game. We may not be seeing a home run every day, but at least we're getting a base hit. So things are moving ahead. Interest rates, also a major factor in this. We've had a couple of hikes, but they're still low. And also, the job market. That's a big factor in the stock market. And we've seen robust hiring. We've got the July unemployment report tomorrow from the government. Yesterday's ADP report showed robust hiring in July, which is usually not a really big month for people looking for jobs. So those are three things that are playing into this very robust stock market.
I've heard this, that tax cuts are already baked into the cake. And if they don't get tax cuts, this bubble is going to burst.
That's definitely a possibility. And also you have to consider earnings. We're in the middle of earnings season right now. We had a lot of reports yesterday. We have a couple of reports before the bell today. We have some big reports after the bell. Anytime you see something like this, investors usually want to pause, take a step back, see what's going on. So who knows what's going to happen? And you can always, one thing that you can be sure of, the stock market is going to go up and it's going to go down.
We've also heard that this recent run is based on Boeing and Apple, and that they are sort of the outliers in all of this. Yes,
they are. I mean, one thing to remember about the Dow is a price-weighted index. The 30 industrials that comprise the Dow are weighted due to how much people pay per share for them. The most expensive stocks, like Boeing and Apple, they can move the markets the most. Yesterday's momentum was because of Apple. It jumped 4% right after the opening bell on the heels of a pretty good stock earnings report, and it stayed up all day long. And that's what caused yesterday's major close. If you looked at the other 29 industrials, they were pretty flat.
Yeah. Interest rates still very low. What happens when interest rates start to rise over the next couple of weeks and months?
Well, when interest rates rise, there's two ways to look at it. One, it's going to cost you more to borrow money. Your credit card interest rate, it's going to go up. If you're looking for a mortgage, rates may go up. If you want to buy a car, you may be paying more for that if you're going to finance it. But interest rates rising are a sign that the economy is moving in the right direction. And if the economy is moving in the right direction, we're all going to be able to stimulate it more. So who knows, how that affects you personally, but rising interest rates may cause the stock market to shift back just a little bit, but in the long run, it tends to balance out.
Daria, they also say that there are so much cash on the sidelines, whether overseas that they can't bring back, or here just in the mattresses, in the banks, that these companies don't know what to do with all of this cash they have.
Yeah, and what better to do than invest it?
Right. Yeah. So that's why the stocks are right. That's why the stocks are high, because there's nowhere else to put it.
Absolutely. And in investment professionals, I talked to an investment professional for my business feature the other day, and he had said that, more people are moving to stocks as their main form of investment. But this is what I found really interesting. A lot of people are still wary of the stock market. They still would rather put their money into things like real estate or into gold. Maybe this is what they needed to change their minds.
Daria Albinger with ABC News. Thanks for checking in. Good stuff.
Thank you. Bye-bye.
725, Big 550. Very